You're listening to Dairy Voice by Dairy Business News, a podcast exclusively for the dairy industry.
One of our sponsors of the Dairy Voice podcast is National DHIA. NDHIA ensures information accuracy and represents their members' interests. They are the direct voice for the dairy information industry. To find out more, go to dhia.org.
Good morning, good afternoon, and good evening. Welcome to the Dairy Voice podcast by Dairy Business News. I'm your host, Connie Kuber with Sealpro Silage Barrier Films by Connor Agriscience. Thanks for joining us today. Please like, subscribe, and share this podcast with all your friends. And before we get started, I always keep in mind that we do have listeners who are not part of the dairy industry, and we appreciate you learning about the great lengths that the dairy industry goes to educate and share information that benefits not only the cattle we manage, but the people who consume our products, and that would be you. My guest today is John Ellsworth, owner of Success Strategies. John is an expert in agricultural finance and continues to help many dairy business owners and managers navigate the ever-changing challenges in that arena. And there's plenty of them. We've got a great show for you today. We're talking about exports, tariffs, and interest rates, and whatever else comes up in our discussion. And there's a lot to unbox in that whole menu. So first, John, though, please introduce yourself and your company.
Absolutely. Thank you, Connie. I appreciate the introduction, and good morning, good afternoon, and good evening, no matter where our listeners are. Glad to be here with you again. And I think this is really neat to do a quarterly kind of financial summary. I think it's pretty exciting. We're definitely in a challenging time. I know we're going to talk about tariffs and stuff, and I think they're taking a lot of heat, and they deserve part of it. I'm sure the tariff policy does. Right. But the reality is there's more to the picture than that. And we'll talk about interest rates. That's having a big impact on dairy producers, because I think the Fed, we'll get into more detail, but I think the Fed could be lowering interest rates, but there's fear about inflation on their part, and they are extremely scared of rearing its ugly head with inflation again. Right. And so I'm on the side of the producers, and I think interest rates coming down would be a good thing for many of them. That's the type of stuff we do with clients, is try to figure out how to get refinanced, how to manage cash flows month to month and year to year, and basically stay ahead of the curve. You know that old song of being followed by a moon shadow? Well, right. That's how it feels in the dairy industry sometimes, where we just literally feel like there's always a cloud coming over behind us.
We've seen it before.
Absolutely, yes.
With over 85 projects, California Bioenergy is without a doubt one of the leading developers of anaerobic digesters for dairy farms in the United States. Since 2006, CalBio has been forming successful partnerships with dairy farmers to create digesters that are built to last. Our CalBio team has the expertise to help lead you through the entire development process. From project design and engineering to credit generation and the day-to-day operations. With subsidiaries in the Northwest, Midwest, and Southwest, CalBio is ready to partner with dairy farmers across the country. Learn more at calbioenergy.com.
I looked up on Google and found that Mexico and then Canada, despite any trade rules and their own quotas, they take 40% of all exports that are going out of the United States, and then Central America is starting to trail behind. So, what can we talk about exports? What do you think is going on, and where do you think it's going to go?
Certainly, Mexico and Canada are part of the USMCA, U.S.-Mexico-Canada agreement, and that's been a major improvement over the old NAFTA setup. I'm not sure how they talk about free trade. I'm not sure how free it was for the U.S., but they are big trading partners for us. Mexico takes a huge amount of cheese from the U.S., and so that is a major market for us. I just read something in the Daily Dairy Report today about even the exports to China are up 2.4% over last year. Well, if you listen to the media, that's not supposed to be happening. It's supposed to be going the other way. So that makes me have doubts about what I read in the media sometimes. But 2.4% is an increase that I didn't anticipate would be there given the tariffs. But I think the export picture is really carrying the industry right now.
Mm-hmm.
And that's not to say they're being helped or hurt by the tariffs. Just a plain fact is the exports are carrying the day right now. I think the U.S. consumer is kind of tapped out financially in a lot of respects. Credit cards. I was reading something the other day about people borrowing money to buy groceries, which I don't know if I live in a bubble. I've never had to do that, but maybe I do it too because I use a credit card when I go to the
Right.
grocery store. So
Yeah,
if that's
guilty.
counted as borrowing, I guess I'm borrowing for it too, not because I have to, just because I don't like to carry $200 of cash around with
Mm-hmm.
me.
Mm-hmm.
And I kind of like to think I'm like that driver that had the sign on the back of his car. The driver carries no more than $20 cash. And then I'm
Right.
going to add to mine and say he's married, you know?
Yeah, exactly. Yeah. Yeah.
It's good because I typically don't carry a lot of cash, and it's not because of my wife. I can't blame her, but I say that jokingly. What's really interesting on the export front, ours should be fairly strong, given that we have the U.S. has the lowest dairy prices in the world right now. Our
Mm-hmm.
butter is cheaper, our cheese is cheaper. So we should be very competitive in the marketplace. And I don't know why we wouldn't be, I guess is what I'm saying. So they're very positive, but that truly is carrying the day. If you want to talk about the tariffs, the challenge with the tariffs is the tariffs are nothing new. I mean,
Right.
that's how we financed the US government in the late 1800s through
Exactly.
tariffs, not income tax.
Mm-hmm.
And it gives me a pain in my lower back every time I think about income tax. I'm sure you too. And most of our listeners as well. But they seem to have this thing, they're able to prepay some expenses. You can only prepay so much paper in my business. And so
Right.
we don't
Right.
we don't have a lot of items to prepay. But nonetheless, that's life goes on. I
Well, I mean,
think
income tax has always been a fact of life ever, for so long. It's hard to imagine
in
what
our
it would
life,
be like
yes.
to have
Yeah.
lesser taxes. We would have nothing much
Yeah,
more
and
to complain about.
it's just I think it was around World War One, like 1916, when this temporary income tax came into play.
Mm-hmm.
And what's happened is it certainly has been a long time as a temporary tax, but over 100 years. But I think the tariffs are nothing new. What I found kind of a revelation, and I guess I just didn't realize this. We have countries coming to us and saying, that's just not right that you're charging us a tariff. But they've been charging us tariffs for 25, 30 years. I'm
Mm-hmm.
like, okay, so what's good for the goose is not good for the gander. I mean, it's like that doesn't make sense to me. My impression is that the Trump administration is essentially trying to level the playing field. They weren't going to lower their tariffs. So I think the Trump administration got the attention of countries by slapping these tariffs on us. And it was like, whoa, it's a wake up call. I'm not saying it's right, wrong. It's obviously having an impact. I think it got a lot of negative publicity at the beginning that the price of everything was going up. But I would disagree with that because I think the consumer is tapped out. In your company's case, for example, your consumers are the dairy producers.
Mm-hmm.
And we can do a survey of them, but I think most of them would agree that they're kind of quote unquote tapped out too.
Right. Right.
Interest rates have been tough on them. Feed costs were high. Fortunately, those have come down. But unfortunately, the milk price is coming down a little bit too in the U.S. market. So we've gone from $22 to $24 a hundredweight down to $18 to $20, depending
Mm-hmm.
where you're shipping, what market you're shipping into, and stuff like that. The U.S. has always been the consumer of last resort, and I think that's why economically other countries that were exporting to us could get away with these tariffs. But obviously, the Trump administration looks at that a little differently and I don't think the consumer can take a whole lot more. I mean, we have seen prices going up, and maybe you are seeing in your business. You would be a better judge of that than me. I don't buy anything from overseas other than normal, like all of us do.
Right.
So I'm not sure that I have felt it specifically, but to me, a bigger pain, if you will, is for dairy producers has really been, there's talk about like canola, for example, that I heard a guy say the other day, well, I don't know if I want a contract because they might slap a tariff on top of it. Well, even if they put a 20% tariff on it, it still looks to me like it's competitive to where it had been historically. So I'm not sure maybe that's a little short-sighted, unless he's just taking a wait and see, and maybe that'll work out. But I'm not a wait and see kind of guy. I like to cover my bets a little better than that. So, so if it's $260 in California per ton for canola, 20% might take it to 300. But we've paid more than that in the past. So the alternative is to go to a different source of protein or whatever you're trying to acquire in the diet, of course. But I think the exports are carrying the day. And I think those will continue. The big problem that I see in our industry that we're being slammed with, and this is particularly true to some extent on supplies, a big extent repairs and maintenance, is the inflation we've seen. And that wasn't caused by tariffs, my friends. That was caused by politicians who said after COVID or during COVID, they threw 10 or $20 trillion into the US economy. And that type of infusion of cash or capital has a very positive impact. But it doesn't happen in 2 days or 2 weeks or 2 months. It takes some time. And the impact of that was just starting. And then it was like starting a fire and then throwing fuel on it, gasoline on it. And we got a flare up when 2 to 4 years ago, in an effort to buy votes, we threw another $10 trillion into the economy. And frankly, we didn't need that. In fact, it hurt us because that's why we saw such inflation the last few years. And we're seeing things come down now, egg prices, which really, I don't think that caused the egg prices. I think that was more bird flu and losing birds. Yeah, there were a lot of factors on that. It wasn't the $10 trillion, but a lot of other things, it was the $10 trillion. You put that much money into the economy, and when we go spending, man, we'll drive the price of everything up. So the other downside to that is when we started seeing this inflation, which is sort of self-inflicted by our politicians, the problem with that is that interest rates were raised by the Fed because they thought this is getting out of hand. We've got inflation. We got to slow the economy down. While I would suggest that they've done a pretty good job of slowing the economy down, other things are getting blamed for that. And we probably shouldn't have had that to begin with. But the interest rates are not coming down. And I think in some respects, we're seeing deflation on some sectors, not necessarily dairy, but we're seeing it in some places where things are actually, on the contrary, not going up, they're going back down. And we do not want to get into a deflationary cycle. So I think the Fed was late to the game raising rates, and then they went overboard, as they sometimes do, or as a friend of mine said, as they always do. I don't know if that's true or not, but now I think it's time to bring them down. They brought them down a little bit, like 1% since last fall, but that's a tough balancing act, and they do not want to see inflation come back really super strong like it did in the early 80s. They thought they had it whipped then, and Paul Volcker, who was the head of the Fed at that time, lowered rates, and it really got ugly again. And so I think there's some timidity, some concern about they don't want to see that happen again.
Get your Sealpro silage barrier film today. Protect the seed, fertilizer, labor, and expensive inputs that you've invested in. Choose best-in-class Sealpro now in 3 different versions: traditional 2-roll application, our new co-rolled application, and super simple and wildly successful 1-layer film, Sealpro 1. It's easy to buy, easy to use. Contractor covering? We'll work with them. Learn more at sealprosilage.com. That's SEALPRO silage.com. Family owned and operated for over 25 years. 559-779-5961. That's 559-779-5961.
I think producers and consumers and producers are paying the price for that. Higher interest rates on homes, higher interest rates on cars, higher interest rates on equipment loans and real estate loans for dairymen. That could have some long lasting effect. And I'm more concerned about that than I am the trade war, if you will, because I think no matter how we look at it, we step back from it. I'm not saying it was done perfectly. I'm not a trade expert. I'm not an expert. That's really not what I work in tariffs and stuff like that. So, but looking from the outside, it did have its intended effect. Mexico, you said, was one of our biggest export markets.
Right.
They came to the table right away.
Mm-hmm.
And there were a lot more issues than just the price of things with the tariffs. There were border concerns. There were all types of issues. But the Mexican president, she was pretty smart. She got to the table right away. And I think that's all that President Trump wanted, was to balance the playing field a little bit. And I don't think we lost anything there as a result of it. But it appears that their exports are doing very well.
Right.
And they are a very valuable trade partner. We could not do as well as we have in this industry without their imports, our exports to them, rather.
No, I agree. I think this administration has brought these tariffs in to kind of wake people up, both in the United States and in throughout the rest of the world. I think that we have to remember that this administration comes from a business outlook, and when you're a negotiator, there's not very many of us in the United States who are adept or have a lot of experience with high level negotiations. I mean, yes, there's certainly people who do that for a living, but a lot of people don't have an idea of how that game works. And we're seeing it played out before our very eyes about how you go into these talks and these trade discussions, and hey, you ask for a lot. Maybe you don't get it, but you kind of show a little bit of what you want and try to communicate that. And in the end, do you get exactly that? Probably not, but you get something. And I think that's where, like you said, it's a place to start, and then things kind of level out.
Yeah, and I think the initial reaction to tariffs was, and I heard this from family members of my own, the prices of everything's going to go up. Well, it already was, because as we talked about the inflation. So I don't exactly think it's fair, and I disagree that because of that. I think it's a fairly narrow view of the economics of the whole situation. The real issue was, we could not and cannot continue to have these huge trade deficits every year, especially when they're accompanied by, I'm trying to think of a nice term for this, when they're accompanied by government deficit, which is just huge every year. I mean, we're at what, $32 trillion deficit? I mean, I do know enough about business. It doesn't have to be government. You can't keep running deficits every year.
No.
And I've had some discussions with producers recently, and they aren't necessarily thinking exit, but they're saying, what else can we do? And we're looking at different options. I said, one of your options, you can keep going, but it's not a long-term plan, because if you're losing $170,000 a year, you can't, I'm sorry, but nobody's going to finance you until you have zero equity. It's foolish to even think so. Now, can we restructure the debt? Possibly. I'm looking at a deal right now that we could potentially restructure the debt more onto the long term, so he has 20 years to pay for it instead of 7 years on his herd loan, that type of thing. But yeah, the banks are going to look at that and say, hey, we got to make it work, not just for the bank. They got to make it work for the producer too. I think that's another concern that we have, that I've been reading a little bit about, that we could have basically a liquidity crisis where, yes, there's money out there and the Fed's putting money out and all this stuff, but the banks aren't necessarily lending it. It's kind of like they want the full market rate, but they don't want any risk whatsoever. So we need to identify the risks and come up with mitigating factors that we can overcome them.
Right.
I can't speak for your business. I don't know your finances, but I can't run big deficits forever in mine. And I think I know what works, and it has been working pretty well. And most of my clients are in really pretty good financial shape. Our new business typically comes from people that aren't in good financial shape. And if they don't usually call because they say, we made so much money, John, we want to share it with you and have you do some consulting for us. It's typically they've had some challenges, but I've had a recent refinance of a new client. I've done this for 27 years, this consulting work, and I was in banking before that. But I got to tell you, it took a year and a half to get them refinanced. And they were not a weak operation. They had good milk production, they had decent cash flow, and they were not highly leveraged in any way, shape, or form. I thought, as I often do, that the loan structure was really stupid, for lack of a better term. But it didn't matter because the bank that they were with just wouldn't do anything.
Yeah.
They just basically said, suck it up. You're going to have to make this work because we're not going to do anything. So how soon can you find another lender? And we looked at 10 or 12 banks, and it took a year and a half. And we, fortunately, a farm credit organization picked up the deal, and they have been splendid to work with, and they're happy. They're making money. The client's making money, and we have a decent loan structure now. So it's been a win-win.
I think that's important for our listeners to remember too, that, there's more than one bank in town.
That's true, but there are fewer than there used to be. I will say that it's getting harder. It's getting harder to find them, right? To come up with them. And yes, in my role, I have to be a little bit outspoken on that. So occasionally, like, I was looking for a bank when I found this one. So it's you can't be. It's not a world for the timid. Believe me. I think it helps having been there enough times in 27 years that I can read through banks pretty well, and they're good people generally. And to be perfectly honest, it's not the bankers, it's not the lender, it's somebody upstairs that has an anomaly against dairies, or wheat farm, whatever it is. And the almond industry is going through this a little bit too, because now the prices are coming back and they look really good this year. Maybe $3 a pound, who knows? But that was an avenue for dairies to diversify, and many of them did. Some of my clients did too. They diversified and went, oh my gosh, what happened? This was supposed to help me, not pull me down. But when they went to $1.65 a pound, that wasn't so lucrative after spending $10,000 an acre to get the trees developed over 3 years. So that's a bit of a challenge. I understand the perspective of the banks. The fact that they may have made some bad deals in the past doesn't justify not doing good deals now. Because if anything, if you're not doing well in some aspects, some sectors of your business, you would be wise to bring some good sectors in. So, to balance that out or overcome the weak spots.
Back to interest rates, any crystal ball that you have that you think was going to happen here?
I thought that at their last meeting in late May, I thought that they would, or mid-May, that the Fed would start lowering rates at least 0.25%. I think in June through December, I think we'll see rate decreases. And the reason is because I think we need to boost the businesses to some extent. They've got to get a break. And I'm not justifying being over leveraged with debt, but the reality is, when people are carrying debt, it's hard, if it's on a variable rate, to carry an extra 1 or 2% interest. It's pretty brutal. And I think that's being reflected. I think we've seen that in the marketplace, and not just in dairy, but in all agriculture and non-ag too. I think the car sales have probably hurt, and they're such a bargain anyway these days buying cars. I just can't believe what you can sell a used car for.
Yeah, right.
It's just incredible to me how much cars have gone up. And, our poor farmers, our dairymen, our dairy customers, they're hurting, because they're hurting in the respect that $100,000 won't even buy a decent tractor anymore. We're talking like, $150,000, $250,000. And I don't even want to talk about choppers. There's a reason that there were custom businesses, of course, chopping, which may not be a bad thing. That's good. It created a business for someone, and they can be an expert in that sector and produce better feed for you to cover with your silage barrier, which is a win-win also.
Right.
And that's been a big advance in the industry. I would suspect, going back to your original question, I think by June we'd see at least a quarter decrease at their next meeting. And they meet, I think, 8 times a year. They haven't really done anything this year so far, but I think we'll see June. And I'm not sure the exact dates, but it's like every 10 weeks they meet. So probably June, August, and maybe a couple more before year end.
Yeah.
The nice thing, if it's possible for them, if they think it's possible for them to do it, there's no political ramifications as there have been the last few years. They did lower rates right in September, October of last year, a little bit, not to help the incumbent, or I shouldn't say the incumbent because he wasn't running, but Kamala Harris was running. And I think, and they did not necessarily want to influence the election one way or another. So that's a tough act for them. I'm glad I didn't have to make that decision. Yeah. There are no major elections this year. Next year, there's the midterm elections. And so frankly, if they're worried about doing it during political season, I'd say this is the year to get it going.
Yeah, get it done. Yeah.
But
yeah.
As I said earlier, I think they're already late to the game anyway. I think that we should have seen some more decreases by now.
That would provide some welcome relief for every economic factor in the states here.
Today, I mean, you're still looking at 7.5% to 8.5% interest rates on feed lines and things like that. And if you don't have money borrowed, bravo for you. That's fantastic. I'm happy for you. But the reality is those producers that do are still getting hit pretty hard with the interest rates.
Is there anything that you wanted to add to our discussion today that would be helpful to our listeners?
I'll be perfectly frank with you. I think we can blame the media, as in the news. Right. I think sometimes they can blow things out of proportion. We need to kind of clear our heads of that sometimes and think about what we can do to get to the goal line instead of worrying about, well, gee, corn could be high this year. Well, I don't think it will be, so that's probably not a good example. But sometimes we spend more time worrying about all the things that could happen instead of focusing on what is happening. And that's why I am absolutely adamant about measuring cash flow every month for people. I do it for every one of my clients. And I think it's crucial that we do that because you just don't know. It's the only way. And I'm not taking anything away from the accountants. They do fantastic work. But getting the news 3 months, 6 months, 12 months later doesn't help me today. Right. We got to stay on top of that and stay current on that. And I think that's the best way to do it. And then focus not so much on damage reduction, but rather what can we do in a proactive way? Is it adding more cows? Is it, I mean, I hear people are going, man, I don't know. I just can't make this go. But they have an excess of heifers. My goodness, their highest price that I've ever been in my lifetime. I thought they were high in around 1980 when they were $2,000 a piece. I mean, you're talking about springers and fresh 2-year-olds at 3,500. I've heard as high as 4,000, which I think is crazy. But if you got to have them, I guess you got to pay the price. My advice for producers this year, I think this is going to be a good year for us as producers. I don't think it'll be a phenomenal year, but I think it could be a good year. But I think it's stay focused and do the best you can on keeping things current. I heard Les Brown the other day. He's a motivational speaker. I love listening to him, but he was talking to a friend of his, and sometimes you just got to step up and do some more. In his friend's case, he was in sales, and he said, how many calls do you make a day? He said, 25. He said, well, do 50. Do 100. Do 75. Do whatever. Do more. And what he was saying was be proactive and move forward. He said, and this is the part that I thought was hilarious. He said, there's nothing will get you back on your feet more than missing 2 car payments. And so he said, get out there and get it done. And so I would encourage producers, maybe it's best in some respects to turn off the news and just focus on your business and not necessarily, I often say, don't compete with other producers, compete with yourself. How did you do the last 3 years? What are the areas when you compare to the industry that you need to shore up? Are there some investments? And AI is coming along, and we hear about this all the time. It's kind of scary in some respects, but there's a lot of things already in agriculture that are driven by AI. That automation is, and labor, we're getting whacked big time, not just in California, but California is a great example where limiting us to an 8-hour day, and then it's overtime after that, and breaks. And I'm not saying people don't deserve it, but labor is an area that my clients have paid considerably more in 2025 than they have in the past. And it's a trend that's already been started 10 years ago, but it's just continually going up. I would say focus on your cost, but you never want to cut a cost that's going to hurt your herd, or in another respect, over your people either. And so we do the best you can and focus on the long-term goals. You got to play the whole game to get to the ninth inning, but the ninth inning matters, but not if you get blown out in the second inning. So you want to stay ahead of the curve there. So,
well, thank you, John. It's been it's always a pleasure to talk to you, and I always learn something new every time. I am not a numbers or finance person. That's what I have Ron and Madeline for in our business. So I really appreciate you coming on here today and talking to us. Is there a website that we can go to learn more about your company and what services that you offer?
Listeners can go to www.success strategies strategies.com, and they'll find a lot of information there. They'll find access to, I don't know how many hundreds of YouTube videos I've put out in the last 10 years, even more blogs, because we were doing those before we did videos. So if you just want to entertain yourself, you can do it for free. You can do it at our expense. It's fine. It's not free for us to keep it, of course, but we're happy to do that and be a resource for people. And if you see something you like or disagree with, you can email me and tell me about it. You can tell me if you like it. You can tell me if I think this is out in left field. What do you think of John? I'm good with that. I have no problem with that at all. My response will be positive either way. So I appreciate that.
Yeah. If you're on LinkedIn, follow John on his LinkedIn account. He always posts those videos, and they're always fun to watch and learn from. So, well, thank you very much again, John, for being on
You're welcome.
Dairy Voice by Dairy Business News. I'm Connie Kuber with Sealpro Silage Barrier Film by Conner AgriScience. And you've been listening to Dairy Voice by Dairy Business News. Please subscribe, like, and share this podcast with your friends. And we appreciate all the perseverance of dairy farmers. And as we record this in mid-May, planting season is done, and spring forage season is either done or going to be full on. Remember, you can go to my website at sealprosilage.com to brush up on your harvest practices and safety preparations. Thank you for listening, and we'll talk again real soon.